Today we will learn how to use Vwap, that is volume weighted average price, for timing your trading entries and exits. The average price for trading day weighted by volume, and the property of this particular indicator or average is that it acts as a magnet in sideways trading days, and whenever the markets are trending, it usually acts as a support for that trending move. So let's just straight away dive into a few examples. First, we'll look at how Vwap acts as a magnet in a sideways market. This is a recent example, and in this example you can see that prices straight away started moving down from the open, and then they went sideways for a while. Again a breakdown happened, again the price went sideways, again the prices broke down, and then it went for extended period of this kind of a sideways move. What this particular development and this volume profile structure was suggesting, that the prices were getting exhausted as they were moving lower, and then in this last sideways move you have this Wyckoff spring, as we call it, a low where there was some evidence of demand. Then we take out that low and move higher. Then you have this no supply here as well as here. So these two no supply bars tell us that there was lack of interest to the downside. So either at this point or at this point you can take a scalp for the test of this volume weighted average price. Because there was exhaustion, it was likely that the Vwap will act as a magnet and attract the prices. Since it was there was some exhaustion in the markets, Vwap did not let the price go too far away from it. It actually again pulled it back to itself. Here again you can see that basically the start of the day itself pointed towards a sideways day because it was a tight balance and it was within previous day's range. But then we get a nice spike higher. Usually spike higher with such high volumes do not sustain, and then we get this no demand here right at the top after this spike. And once we saw this, we immediately knew that there was no more interest to the upside. Higher prices were not attracting additional buying, and the prices were likely to pull back towards the Vwap. So we come down, the first attempt fell short of it, move higher. Again the sellers enter, and this time they take out the Vwap. In fact, they go further and come very close to the day's low. But again you can see this move is also a spike. Volume has increased a lot, and then again it has gone too far away from the Vwap. So Vwap again pulls it back up. There was another attempt to move lower. This time we take out day's low and we uncover nothing below it. So again buyers enter, and again they tag the Vwap. So basically this purple box tells you that it was a range, and every time we went to the top of the range, Vwap pulled it back down, and when we went to the bottom of the range, Vwap pulled it back up. So that is how volume weighted average price can be used to trade sideways trading ranges. This also works on higher time frames, so I have included an example of daily chart. In this case you can see that we have a nice uptrend. This green line is the monthly Vwap. So every time we come back to that line after a up move, we find support. You can see that here also we try to break it, but the next day only closes up, and again we resume the uptrend. Again the current market development is pretty similar. We are again testing the Vwap 2 times, and we are finding support here. So this is how in a trending market you can use Vwap as support or resistance. You can see here we found resistance at Vwap. Again we tried to go higher, the trend was down, so Vwap pulled the prices back and the downtrend continued. So this particular setup you can use on higher time frames also to find good entries and exits. So that is how I use Vwap. I hope this short video helps you to understand what Vwap is and how you can use it in your trading. So that's all I have to share in this video. Thank you for listening.